I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So our futures are pointing to a slightly lower open this morning ahead of the FOMC minutes at 2 p.m. Eastern today, which of course will be the key economic event of the day to watch. So
today's the big day.
Today is the day. We've been waiting for it. So get out your crystal ball for us. What do you expect?
Well, the meeting was a month ago, and a month ago things were a little bit stronger, and I think their tone was a little bit more hawkish to the fact that, you know, they were going to probably announce in September for the actual reduction of the pace of purchase for October, or some even thought maybe they would do it in September. You know, if today was a new meeting based on the market conditions with the slight pullback we've seen in the indices and some of the deterioration in the world markets, I think it would be a bit different. But I do think that the market's done a decent job, you know, in this corrective phase, pricing in the possible hawkishness, or maybe not. Same thing goes with rates. Rates, what, almost went to 3-year, you know, I mean, a 3 handle on the 10-year. So ultimately, you know, we've pulled in a decent amount. The question is, has it been enough, and where is that tradable pivot to buy the dip or wait for lower prices?
Right, and there will likely be movement in some of those groups like the TBTs, where you just mentioned rates. But before we get into some of those groups that we could see movement in, why don't you show us the levels that you'll be watching?
The levels on the chart. S&P, here we go. All right, you've never seen this before. I've never shown you this, this trend line that started in November that's only been tested once, coming all the way up, or the accelerated trend line that we've held the majority of the year except for this point right here after that outside day on May 22nd. So the question is, look at this pullback that we've seen from this head and shoulders top. A very scary pattern if you don't know how to read it, but if you do know how to read it and you have your levels, it could be very profitable. So with that said, here was your left shoulder, your head, your right shoulder. Remember that 1698 we talked about to take some risk off? Well, that was a nice day right there. Then it consolidated here, closing the lows of Wednesday, then boom, sliced and diced this lower, you know, or this neckline to where we are now. We are right below the 50-day. Yesterday we tried to muster a bit of a bounce. Did not really work. You know, at this point we're opening still above this 2-day pivot, so this is your pivot. 1645. If we hold above it and go sideways, perhaps some pressure would be relieved above and a close above 1658. If intraday we trade below this, it will trigger some stops. It would probably get me out of some of my longs that I'm trying to tactically approach in this area. And then you want to see if we, you know, close below or we get stopped out, comes back above, creates that red dog reversal for then a move through here. So I think the next 2 days are going to be very interesting to see how this pivot gets handled. Ultimately, this is a very, very big support coming in around 1633, and you'll be proud of me, Vicky. Brittany, I didn't ask you how many berries was that?
How many berries?
Berries.
Oh, how many berries? I don't know. I wasn't counting.
About 2 or 3. So not that important, but pretty important.
Right. Well, Scott did mention rates. So on Fed Day, it is important to watch the TBTs. We could likely see movement there on the Fed minutes.
Yes, and there's been times to be long this. We've talked about putting it in the drawer for 2013. What that means, when you put it in the drawer, means you don't look at it, just like a dirty sock, but this has been a very clean one. Anyway, with that said, it's been something for the thesis that's been working out. We talked about it being overbought a day or so ago. It's pulled back a little bit. You look at the levels here on the chart and you will see that, you know, this was another nice move, and this was above 78. Big pivot to get above was 70 way back when in June. So, you know, ultimately every time it's pulled back to the 21-day moving average, it's been a nice buying opportunity since May. So with that said, little extended here. Here's your 8-day, here's your 21-day. If we were to get a dovish, you know, minutes, which I don't think we're going to get, perhaps you see a little bit more of a pullback in this, and you could be looking to buy it somewhere in this area, because I still think there's going to be a 3 handle at some point in 2014, the first quarter. So if we get a very hawkish minutes, which I think that could be the case because of when that meeting happened. Here's your pivot, 82.75. If it were to get above that, I would not want to be short these things.
Well, it's also good to watch metals on Fed Day, which have had a nice move and seem to be taking a little bit of a breather. So what are the key levels that you're watching the metals to hold?
This at first for most of the year was in a big downtrend, and then we talked about the blood on the street lows. Anytime you see that the towel be thrown in, you want to take a look, and we saw that on June 28th. You take a look at the chart. This was one spot to get out of the way when it broke 161, another spot to get out of the way at 150, but then people who missed these spots probably capitulated it down here. And if you look at this red dog reversal, it's blaring. Okay, all you had to do is use 115.65 as your pivot, went below it quickly, engulfed it, and then from there it's been a nice trend to the upside. Recently we were trying to catch a nice trade through 130. It happened. Now it's flagging again. The question is, does it hold, and is it pent up the way it's been, holding above the 8-day, which is 130.93 for continuation above 133.27? We'll find that out today. Right now I have no position in the GLDs, but I will be watching it to see if we get some kind of opportunity as the minutes get displayed.
And yesterday, the banks put in a red dog reversal, which helped the overall market. So that will be one important thing to watch today to see if the banks can hold.
Yes, the banks have been putting on the pressure pretty much during the past, 2 weeks. So we've been looking for that type of reversal pattern. And what not better than a RDR. When you get an RDR, if you know what that is, a red dog reversal, that means that you have a move that's going to one direction. This has been to the downside. Then you get a trade through the prior day low, so people get stopped out. Some people add to shorts. But then what happens is it reverses, gets back above that low, so people who got stopped out have to chase it, and people who press their shorts, which hasn't really worked that much in 2013, have to cover, so you get a great actionable trade. And sometimes that trade leads to a major inflection point. So if you look here at the XLF, the trade that went to a nice inflection point that made those November lows, look at that. This one, who knows what this will lead to, but you don't really have to know if you do it correctly. You could be long versus this low. This low here was 1975. Today, and then 1972. So you're talking about a 3-cent stop. That's pretty well defined. Okay, and then from there, 20 cents is 20 cents, decent, percentage. Either way, it's opening a little bit lower today. If it were to go to red and break below this area, I would think this market would get very weak. If it were to hold this low, go green today and then even start getting above this pivot here, which is 20, you could see some continuation out of this pivot, and this will be something very, I'm going to watch very closely.
Will you be watching Goldman Sachs very closely, because that also put in a red dog reversal yesterday?
If you were choosing a vehicle within that sector, Goldman Sachs is one to choose. I chose Bank of America, but we'll get into that. Goldman Sachs, has led the banks at a certain time. There was talk about their options trade yesterday that can cost them $100 million or so, but what's $100 million between those guys? Anyway, I wish I was those guys. You look at this and you will see that Goldman Sachs has been in a nice trend, still holding above, so people weren't sure where it would stop, but you know what, it stopped there. The low was 158.53, put in a low yesterday of 157.78. So if you want to take a closer look here, here is your new pivot area. Okay, today it's probably down a little bit. So if we were to go green and start trading above 160-ish, that would help, put some, footing back under the overall market and also help with the banks.
But as you said, you went with Bank of America, a stock you've talked about many times.
You know what, an old dog, new tricks. Well, I keep going back to this dog,
right,
which has not been a dog. It's been, a frisky lion or something like that. Not a good metaphor there. But anyway, it doesn't matter what you choose, just know how to choose it. And this one had a nice red dog reversal too, traded below 14.13, put a low at 13.98, even back to where this pivot was. People on the site have to commend you, like, red dog, look at Bank of America, how come you're not going with it? I'm like, okay, let's grab it. So anyway, with that said, you have this descending channel here where it's been putting in enough time in almost, a month. So with that said, now today it's lower, like by a few pennies. So if it goes positive, trades above 1440-ish, it could be back in motion, and then that'll help the market also, put in its pivot. So ultimately, this has been a great stock for many people in our community. We've talked about it probably too many times, but not too many times if you have this in your drawer, because, it's probably bringing you happy memories considering, look at the size of this move, and I'm sure a lot of you were in when we were going after this thing at 10 bucks right there. Oh, I wish I had that day back.
I like that pearl of wisdom. Doesn't matter what you choose as long as you know how to choose it.
Yeah, exactly.
That's a good one. I like that one. I'm going to remember that. Well,
let's write it down.
what about Citigroup? Now, that had an outside day yesterday, so positive sign for the stock.
Yeah, this one, for some reason, I just don't have as much success with. So I kick it to the curb, so to speak. But you don't have to. You could ride a bike, or a city bike, that is. With that said, here you go. This is that same type of trade. This actually is a little bit more blaring, okay, where it traded below 49.30, put a low in it. What is this? 48.77, and then gave you a really nice move, almost $1. So for the risk reward. So anyway, with that said, see how it handles. If it can go sideways a little bit, and then if it could get back above yesterday's high, it too can make a move here. This, this is a little, it has spurts. Every now and then it spurts, and it's still kind of hugging this trend line. It's still, this one is actually what, it's actually at the 100-day already. So it's showing a little bit of weakness versus some of the other banks out there. But, it does, when it wants to play catch up quick, it can. So if you chose this one, trade it versus level. But ultimately, these all look somewhat the same. You just have to pick which one you feel more comfortable trading based on speed, liquidity, price, all those good type of things.
Right. Well, as you mentioned, versus a stock like JP Morgan, which I feel as though we're almost going in descending order here, because JP Morgan has been leading the market lower and broke below the 100-day on Monday and put in a big bottoming tail on Tuesday.
Well, it feels just like that. This has been the whipping boy lately of Washington, and every day you hear about some kind of news with it. I wish that, I don't want to say anything, but when that whole London well situation happened, what they were doing is they were betting on Europe. They were betting on Europe to have a comeback, and some funds happened to be on the other side of it, probably short. So who knows who blew that whistle that the trade was a little bit too big, that they stayed with it long, but 2 weeks later they would have been in profits. A month later, some hedge funds probably would have been out of business because they would have been covering their shorts in Europe a lot higher. So ultimately, it's just whatever. It is what it is. That's the way the world works. So it's been under pressure. Yesterday, you finally had a reversal. You look at the chart here. This is the one that has a little headline risk. So it's come down more. It actually traded through the 100-day. Yesterday, it did regroup. This is a big-time bottom tail. So it's got a big travel range from that low here. So see if it could hold above it. If it could hold above it and do some sideways work, I'm pretty sure at some point it'll regroup and it'll get its mojo back. But for right now, it's been one of the weaker banks.
All right, well, coming up, we're going to step outside the banks and go in the trenches with stocks that continue to act well. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that not only continue to act well, but also have high valuations and high PE. Stocks like Netflix, which put in a new high yesterday and closed on highs. So on your radar for continuation today.
It could be, and I think what you said prior to that is very important. There are a lot of people out there that try and keep people away from stocks that have high valuations, high PEs, but these tend to be the biggest winners in the market because people pay for growth. So as long as the trends are strong, as long as they hold where they have to and keep moving in the direction that has been sustained, you don't veer off that path. And if you look at Netflix here, it's been a very strong stock for 2013. It's literally been trending this entire year. And lately it's been on a bit of an accelerated trend. There's been times to add for breakouts, like right here when Mark Sperling talked about it, and then it had a move. Here is when Barron's wrote its negative article, which seems like they're always bearish lately, but anyway, it held where it had to, and now it's at new highs. Always a little tricky to buy new highs, but ultimately if you've been long this thing and trading around it, you're doing a good job if you're trading it from the long side versus the short side.
And a stock like Netflix, also a difficult one to initiate a new long in up here, but 4 up days, maybe some continuation.
Yeah, well, like you said, Netflix on the highs is hard. So with Tesla, after 4 up days, it could be a little tricky, but it also held that strong trend. And there's been a lot of people out there talking about Tesla, talking about how it's extended and it's not for real, it's worth a third, blah, blah, blah. P.S. They can't get this thing below its 21-day for more than a day. So until they do that, stay the course. You look at this chart, you will see that this is, since the prior earnings, here it held the 21-day, here it went below it for a day after it broke this ascending channel on the Goldman Sachs node, which could always raise some fear, but what happened? Red dog reversal. Then it consolidated again right by the 21-day, broke out into earnings. Didn't have enough strength right there, but the market got weak. But what did it do? Held the 21-day moving average. Now it's up 4 days, and I don't see why not. This stock does not make new highs in 2013. Learn how to trade this thing, especially if you're active.
All right, mark his words. And Facebook, 3 nice up days and getting close to 2013 highs. Do you think we'll get back there if the market continues to hold?
It looks like it. 2 different time frames to look at Facebook. Real quick, I did a chart with Deb from the street. Here's that cup and handle pattern, that you could have navigated on a macro stance. Here's the descending channel that it ignited above after earnings. Here's your upper bull flag showing commitment. So, above this 38.60, then you have 39.32, and above that, you get continuation north of 40. You look at it a tiny bit closely or closer on the daily. Here's that upper channel holding in very well when the market corrected. So to me, this remains a go-to vehicle until it changes, and it doesn't seem like it's been changing.
And Green Mountain Coffee, a nice 3-day move, broke out to a new high and closed well off its lows. So this one's not stopping either.
At new highs, market's not even trying, it's trying to find its footing. So what does that tell you? Relative strength.
Right.
So the naysayers out there, they could say what I won't say a bad word, what they want to say. Bottom line is, here's a channel. I like to watch, chart patterns. It started getting above it right there, and now it's at highs. And, this thing also heavily shorted, a lot of naysayers, but ultimately very strong trend, looking good. I would not veer from it until you see something materially changing there.
All right, let's do some quick hits here and talk Best Buy. After beating its earnings estimates, chart looks good. What are the levels you're watching?
This one has astounded individuals and just so shows you how shorts could get crushed if they have an opinion. For me, I was like, how could this stay in business as well? But it kept going higher, so I just avoided it. Sometimes if you don't understand what's going on in a stock, get away from it, don't fight it. If you look at BBY right now, check it out. Okay, look at this gap and go to the upside. What's this doing? It's squeezing all the shorts, have been rolling it up from here. And if you look here, this too, following the 8 and 21 day this entire time, one little touch here of the 50-day, then continued. So strong, strong trend. If you're fighting this thing, I hear you, brother. I don't know how it's happening, but sometimes you can't ask how it's happening. Look at what's happening. What's happening is this stock is going higher. If you don't want to, join them, just step away, because if you fight them, you might lose your solvency before you're finally right.
And powerful move out of TJ Maxx yesterday. It's already back at 2013 highs, so if the market continues to hold, this one looks like it could keep running as well.
Well, this one I have to give you props on. You said you like TJ Maxx, going into the full to buy the dip, and look at the dip. It was a little bit further than some would have liked, but ultimately back at the highs, and this has been a very strong stock for 2013. Look at the chart. Big gap to now trade versus, so if you got long yesterday, be long versus gap. Hopefully it consolidates a little bit before it goes again, but ultimately this has been a very strong stock for 2013, and apparently Brittany has very good taste.
I pretty much keep them in business, so what can I say? How about FedEx? We're seeing some consolidation here. Do you think we'll get a breakout?
This one I don't know how it's up here, but it is. So it's again one of those things where you look at the chart, not at what you're thinking. And FedEx, they say that, then I don't even know what the hell they're saying, to be honest. But the bottom line is, you have an upper flag. It's holding the 8 and 21 day, looking really strong. Market's pulled in. It hasn't pulled in at all. If it gets above this, 110.33, that's all I care about, especially if it closes above it for continuation.
Well, you don't need to know all the time, right? Look at the chart. That's what you're always saying.
Same thing we didn't need to know that Icon was coming in on Apple. All we needed to know that it closed above the 200 day, and if you bought it there, you got paid on Icon's tweet.
All right, well, since you brought up Icon and Apple, let's check in on Apple, which did take a little bit of a break yesterday, was upgraded this morning. Are you looking to buy the dip?
I was hoping that, pre-market it would be down a little bit, and I can get it like $4.98, $4.92, but it's up a few dollars, so, it might be a little trickier. You look at the chart here of Apple, you will see really nice lower range. This is when it started acting better after earnings. Little 3-day consolidation, popped above this downtrend. That was your ad. Had a move. I remember getting out of it here. Then they sent out the invitation, got back involved. Here's when it took back the 200-day. Later in the day, icon came out. Nice, thank you, buddy. And then with that said, it looks like it's needed a little break here. So with that said, the question is, how does it consolidate? Does it stay above yesterday's low, which is 582, or does it break below it perhaps? And then this was that 498 I was looking at, and then big support around the 8-day between 490 and 494. So here's your upper range, and the question is, will it stay really pent up, or will it give us a chance to buy it a little bit lower? We'll see how the day develops.
And speaking of how the day develops, any advice on trading as we inch closer to that 2 o'clock time when we'll have the Fed minutes?
Just, Fed day tends to be very choppy, a lot of false moves. Don't over trade it. Typically, the last 45 minutes is when you get your real direction. And then, unfortunately, sometimes, the day after is a counter trend day to today. So these type of things, it's not really a Fed day, it's a minutes day, but they don't tend to be as clear cut. But what you do know is the 2-day pivot that we have now in the spiders. We have that, 164.75 to 85. As long as we stay above that and you're long some things, you know what? Try and stay the course. If we break above 166.20, yesterday's high, perhaps we get continuation. We know the banks finally got a little bit of a bounce. See if that continues. And then there's been these tech names, high beta names, that continue to be moving higher as the market hasn't even found its footing. So ultimately, if you're trading in August, there's a lot of things to do. If you're a macro investor and you're listening to the 1987 crash people or the 2008, comparisons, I don't think you veer. Okay, you stay the course. And even if something drastic happened, look where we are now after those big, black swan events, a lot higher. It just might take more time, so know your time frame.
And that's your morning call for this Wednesday. Happy trading. Have a great day.